Welcome to the third video in our series on standard costing and variance analysis. In this video, we'll be focusing on the various materials variances which we can encounter. So what are our learning objectives for this video? First, we want to be able to identify the different material variances that we have. We then want to be able to calculate the different variances, and finally, we need to be able to identify potential reasons for these variances. To begin, let us quickly recap our example for the series. Remember, we have a company manufacturing widgets, and the standard cost card is presented. For this video, we'll be focusing on the direct materials. Again, if we focus on the direct materials, we see we have budgeted 10,000 kgs of material A at 15 Rand per kilogram and 20,000 kgs of material B at 5 Rand per kilogram. We then see that we actually used 8,500 kgs of material A at 15 Rand 50 per kilogram and 21,000 kgs of material B at 4 Rand 50 per kilogram. Importantly, on this slide, we see that materials A and B can be interchanged. So to begin, let's consider what could give rise to our material variances. On screen, we have the material information provided in the scenario. Our total materials variance will be the difference between our flexed budget and our actual results. We looked at this in our second video in the series. Now, in considering potential variances, the first thing we notice is that the price may vary. For the standard cost card and the budget, our price is 15 Rand per kilogram for material A and 5 Rand per kilogram for material B. However, we see a difference in the actual results where we paid more for material A and less for material B. The difference in price gives rise to our material price variance. The next thing that we notice is that quantities may differ. Budgeted quantities are based on the standard, but the actual quantities used may differ from the standard. Now you will notice that I have not drawn my line from the budget to the actual like I did for price, but rather from the standard to the actual. This is because the budget here represents the static budget. We need to compare the actual results to the flexed budget. We will do this when we calculate the variance later. This difference in the quantities gives rise to our material usage variance. Our price variance can then be broken down into the pure price variance and the joint price usage variance. Finally, if we have interchangeable materials like we do in this scenario, what we may notice is that the proportional usage or mix of materials may change. So in this example, our standard and budget operate on the ratio of 1A to 2B. However, our actual results are 1A for every 2.47B. Therefore, our mix of materials has changed. Because of this, our usage variance can be broken up into a mix and yield variance. Now let us think through the calculation of these variances. Remember to keep your screenshots of the example handy. So when we determine a price variance, we need to compare what the material should have cost to what it actually cost. In this case, we see that it should have cost 15 Rand per kilogram, but it actually cost us 15 Rand and 50 cents per kilogram. This means that we spend 50 cents more than we were supposed to. If we spend more, it is unfavorable. So now we know that the material A price variance is 50 cents per kilogram. But we need the variance for all the kgs in total. So we need to ask now, should we use the actual or budgeted quantity? We use the actual quantity because that is what we spent the extra 50 cents on. Next, we need to ask if we should use the actual quantity purchased or the actual quantity used. Here we prefer to use the actual quantity purchased and report the variance when it occurs. This is also because in a standard costing system, raw materials should be recorded at the standard price. In this example, they do not distinguish between the quantity purchased or used, so we can assume they are the same. So our total material A price variance is 50 cents multiplied by the actual quantity of 8,500 kgs to give us an unfavorable variance of 4,250 Rand. Now let's think this whole thing through in terms of a journal entry. Let us start with buying the raw materials. What is our basic journal entry? We would want to debit our raw materials and credit the bank account. How much should we debit and credit each account with? Let's start with bank. We simply ask ourselves how much leaves our bank account, which would be the 8,500 kgs at 15 Rand 50 per kilogram, to give us a total of 131,750 Rand. Now let us move on to our raw materials. How much should we debit? Remember, in a standard costing system, inventory is valued at the standard. Therefore, we record the inventory at what it should have cost. As we don't know how much we are going to use, the full 8,500 kgs is taken, i.e. our purchases. Unused items will be dealt with in raw material closing stock. So our calculation is the 8,500 kgs multiplied by the standard price of 15 Rand per kg to give us a debit of 127,500 Rand. Now we have a balancing figure, which is obviously our price variance. Why is it the price variance? Because only our price varied. The quantity is consistent at 8,500 kgs. Is it a favorable or unfavorable variance? And we see here that it is an unfavorable variance, as it is an expense on the debit side. And then our calculation there is the 8,500 kgs multiplied by the difference in price of 50 cents. Now take a moment to pause this video and calculate the material B price variance and prepare the journal entry. So hopefully you calculated the variance as 10,500 Rand favorable and got the correct journal entry as displayed on screen. Now let us consider the reasons why the price may have changed. Again, take a moment to pause this video and see what reasons you can come up with, and then we will go through a few ideas together. Okay, great. So I hope you managed to come up with a few ideas on your own. Let's look at a few ideas together. Firstly, maybe we didn't account for inflation or other price changes correctly. We will consider this type of issue more when we look at planning and operating variances later in the series. Maybe we were unexpectedly able to use a quantity discount, or maybe we didn't buy enough to make use of the quantity discount that we thought we would make use of. Maybe there is a different quality of materials. A higher quality material would likely cost more, while a lower quality material would cost less. Maybe we had poor inventory management and had to make emergency orders. Emergency orders are likely to cost more. When considering the reasons for variances, remember not to just dump a generic list. Pay careful attention to the scenario and look for the applicable evidence in the scenario. Now let's finish off the price variance with our joint price usage variance. This variance is applicable if there is a joint price quantity effect, which may be critical to staff incentives. Specifically, it splits the price variance into a pure price variance and a joint price usage variance. So from our previous calculations, we saw that the total material price variance for material A was 4,250 Rand unfavorable. However, some of this was because production was more efficient by 500 kilograms. So let's break up this variance into the pure price and the joint price usage variances. We know that our total variance was 4,250 Rand unfavorable. Our pure price variance will exclude any usage, efficiencies, or inefficiencies. So we take the price difference of 50 cents and multiply it by the flexed usage of 9,000 kgs. This 9,000 kgs was made up of the 9,000 widgets multiplied by 1 kg of material A per widget. This gives us an unfavorable variance of 4,500 Rand. We then calculate our joint price usage variance. Again, we take the difference in the price of 50 cents, but now we multiply it by the 500 kgs that we were more efficient on. This gives us 250 Rand. It is favorable because we did not spend the money. Added together, we then get our total price variance of material A of 4,250 Rand unfavorable. Now let us move on to the usage variance. When we determine a usage variance, we need to compare how much material we should have used to what we actually used. In this case, we see that we should have used 9,000 kgs. Where did this 9,000 kgs come from, you ask? Why not the 10,000 kgs per the budget? Remember, we need to flex the budget. We actually produced 9,000 widgets, and we should have used 1 kg of material A per widget. Therefore, we should have used 9,000 kgs of material A. We actually used 8,500 kgs. This means that we used 500 kgs less than we were supposed to. If we use less, it is favorable. So now we know the material A usage variance is 500 kgs, but we need a Rand value. So what we need to ask now is, should we use the actual or standard price? Remember, when we recorded the journal for material A price variance, we recorded the inventory at the standard price. When we use the inventory, we will issue it out at the standard price. So when calculating the usage variance, we need to use a standard price of 15 Rand per kg. Our total material A usage variance is the 500 kgs multiplied by the standard price of 15 Rand per kilogram to give us a favorable variance of 7,500 Rand. Now let us think this whole thing through in terms of a journal entry. What again is our basic journal entry? This time we want to debit our work in progress and credit our raw materials. Let's move on to the amounts and start with what is being issued out of our raw materials. So how much is leaving our raw materials? And we see that it's the 8,500 kgs. At what price? And that again is the 15 Rand. Now you may ask, why not the 15 Rand 50 cents we purchased it at? And I want you to think about the price that we recorded it at in the accounts. So that will be 8,500 kgs times 15 Rand to give us 127,500 Rand. Now let's look at WIP. How much is going in and at what price? Remember, we need to record the work in progress at the standard. The price is already at the standard of 15 Rand. But is the quantity? No, 8,500 kgs is not the standard quantity. It should be the 9,000 kgs. 9,000 kgs times 15 Rand per kilogram gives us our total debited to work in progress of 135,000 Rand. The difference now is the usage variance. Why? Because the price has stayed the same, but the usage has varied. So we'll see that our usage variance is the difference of the 7,500 Rand calculated as the difference of 500 kgs multiplied by the standard price of 15 Rand per kg. Now take a moment to pause this video and calculate the material B usage variance and prepare the journal entry. So hopefully you calculated the variance as 15,000 Rand unfavorable and got the correct journal entry as displayed on screen. Now let us consider the reasons why the usage may be different. Again, take a moment to pause this video and see what reasons you can come up with, and then we'll go through a few ideas. Okay, so first we can look at the quality of various things, such as the materials themselves, our staff, and our machinery. Lower quality would likely lead to higher wastage, while better quality would lead to less wastage. Maybe there have also been changes in our production methods, or in the mix of the raw materials we use, which we will look at in more detail under the mix and yield variances. Such changes may result in more or less usage of materials. We could have changes in the quality control requirements of our materials. If they become more lax, then we would expect more usage. If they become more strict, we would get better quality materials and have less usage. Finally, we need to look at our inventory management. Do we have poor handling of materials, or do we overstock and materials get wasted? Again, look for evidence in the scenario you are facing and don't just list every possible reason, even if it doesn't apply. The last variances we need to look at is the material mix and yield variances. These variances allow us to further break down the material usage variance. Remember, the condition to calculate the mix and yield variance is that the materials must be interchangeable. In this example, they are. We will begin by drawing a table. On the left-hand side, we will list our materials. We then have 3 columns. The first column is our standard input. This reflects the flexed quantities. So you should remember that we actually made 9,000 widgets. And each widget was supposed to use 1 kilogram of material A to give us a standard input of 9,000 kgs. And 2 kgs of material B to give us a standard input of 18,000 kgs. This gives us a total input of 27,000 kgs. Our last column then is our actual input. This simply reflects what we actually used, which was given to us in the scenario as 8,500 kgs of material A and 21,000 kgs of material B, to give us a total of 29,500 kgs. Now to deal with the middle column. This column shows us the actual input in the standard quantities. So the actual input is the total input of 29,500 kgs from the actual column. Now we need to split this in the same proportion as the standard input column. If we simplify the standard input column, we see that material A is 33.33% and material B is 66.23%. So in our middle column, it needs to reflect the same ratio. 33.3% of 29,500 is 9,833.33 kgs, while 66.7% is 19,666.67 kgs. We can therefore see that the difference between the first column and the middle column will represent our yield variance. The mix has stayed the same at 33.33 and 66.23%, but the total quantity has changed from 27,000 kgs to 29,500 kgs. Then, the difference between the middle and last column represents our mix variance. We can see here that the total quantity remains constant at 29,500 kgs, but the mix changes from 33.3% of A and 66.7% of B to 28.8% for A and 71.2% for B. So let's calculate our variances for material A. We will start with our yield variance. Remember, the yield variance is the difference between the standard input and the actual input in standard quantities. For material A, we get a difference of 833.33 kgs. Because this is part of the usage variance, we multiply it by the standard price of 15 Rand per kg. This will give us an unfavorable variance of 12,500 Rand. It is unfavorable because we have used 833.33 kilograms more than we should have. Next, the material A mix variance. This time we take the difference between the actual input in the standard quantities and the actual input. Here we get a difference of 1,333.33 kgs. Again, because this is part of our usage variance, we multiply it by the standard price of 15 Rand per kg to give ourselves a favorable variance of 20,000 Rand. It is favorable because we have used less actual input than the actual input in the standard quantities. Now pause this video and try it for material B. Great! So for the yield we get 8,333 Rand and 35 cents unfavorable, and for the mix variance we get 6,666 Rand and 65 cents also unfavorable. Now something interesting to notice is that the yield variances will always work in the same direction. They will either be all favorable or all unfavorable. In this example, all our yield variances were unfavorable. However, for the mix variances, at least one variance will always be in the opposite direction to the others. So you'll notice here that the material A mix variance is favorable, but the material B mix variance is unfavorable. Now let us wrap up this video with a summary of our material variances. Remember, in our second video in the series, we calculated our overall variances. Based on this, we know that our total material A variance is 3,250 Rand favorable. This is made up of our material price variance of 4,250 Rand unfavorable and our material usage variance of 7,500 Rand favorable. We can further break up our price variance into the pure price variance of 4,500 Rand unfavorable and the joint price usage variance of 250 Rand favorable. Likewise, we can break up our material usage variance into the yield component of 12,500 Rand unfavorable and the mix component of 20,000 Rand favorable. Make sure that you summarize your material B variances and arrive back at the overall variance of 4,500 Rand unfavorable. That brings us to the end of our video on material variances. Make sure you master these variances, as there are so many similarities with the other variances we will look at in the series. In our next video, we will look at the labor variances. See you then. Thank you.